Welcome to our deep dive into the crown jewel of the Indian automotive sector, Maruti Suzuki. For over 4 decades, Maruti has not just been a car manufacturer, it has been an emotion for the Indian middle class. From the iconic Maruti 800 to the premium Nexa line, the company has consistently maintained its pole position. Today, as the Nifty 50 giant faces new disruptions, we analyze if this stock still has the mileage to drive your portfolio forward. We'll be looking at their massive market presence, the strategic shift towards SUVs, and their play in the evolving EV landscape. It's about the sheer scale and the trust that Maruti evokes in every nook and corner of Bharat. The Maruti story is a masterclass in Indo-Japanese synergy. What started as Maruti Udyog Limited has transformed into a global export hub for Suzuki. This partnership has given them a distinct edge in frugal engineering, making high-quality cars at a price point that competitors struggle to match. Their moat is not just the engine, it's the serviceability. In India, it is often said that you might not find a hospital in a remote village, but you will surely find a Maruti mechanic. This first-mover advantage in the post-liberalization era has created a brand recall that is simply unparalleled in the domestic market. Let's talk numbers. In the last financial year, Maruti Suzuki crossed the monumental milestone of 2 million units in annual sales. Their revenue growth has been bolstered by a premiumization trend, selling more high-margin SUVs than entry-level hatchbacks. Even with fluctuating commodity prices, their EBITDA margins have shown remarkable resilience, hovering around the 11–13% mark. With a debt-free balance sheet and a massive cash pile of over 45,000 crores, the company is sitting on enough dry powder to fund its next phase of expansion without breaking a sweat. For a value investor, this financial discipline is a major green flag. There was a time when critics said Maruti was losing its charm as Indians shifted towards SUVs, but the management's response was swift and decisive. With the launch of the new Brezza, Franx, and the Grand Vitara, Maruti has rapidly climbed to the top of the SUV leaderboard. They realized that the "Kitna deti hai," or "what is the mileage" crowd, now also wants road presence and features. By leveraging their Nexa channel, they've successfully attracted the premium buyer, proving that they can dominate the 15 to 20 lakh rupee segment just as easily as they did the entry-level space. The biggest question on every investor's mind is the EV transition. While competitors have jumped headfirst into pure EVs, Maruti is playing a more nuanced game. They are betting on a mix of strong hybrids, biofuels, and EVs. Their first fully electric SUV is slated for a 2025 launch. They believe that in a country like India, where charging infrastructure is still maturing, hybrids provide the perfect bridge. This multi-pathway approach ensures they don't lose out on volume while preparing for a carbon-neutral future. It's a pragmatic strategy that aligns with the diverse energy needs of the Indian subcontinent. Maruti is not just vocal for local. It's becoming a global export powerhouse. They are now exporting to over 100 countries, including highly competitive markets in Africa, Latin America, and Southeast Asia. This helps them hedge against domestic slowdowns. On the supply side, their localization levels are incredibly high, nearly 95% for most models. This insulates them from global supply chain shocks and currency fluctuations to a large extent. When you buy a Maruti, you're essentially buying into a highly integrated ecosystem of local component manufacturers who have grown alongside the company. However, it's not all smooth driving. Maruti faces stiff competition from the likes of Tata Motors and Mahindra, who have taken a lead in the EV race and safety ratings. Any sharp rise in steel or precious metal prices can squeeze their margins, as they are often hesitant to pass on the full cost to the price-sensitive Indian consumer. Furthermore, the entry-level car segment, once Maruti's bread and butter, is shrinking, as two-wheeler users are finding it harder to upgrade due to rising vehicle costs. These are headwinds that every serious investor must keep a close eye on. To wrap it up, Maruti Suzuki remains a buy-and-hold favorite for those who believe in the India growth story. With the highest market share, a massive cash reserve, and a clear roadmap for premiumization and electrification, they are well positioned to navigate the future. While the transition to EVs is a challenge, their distribution depth is a moat that no competitor can easily replicate. For a long-term investor, Maruti offers a combination of stability, dividend yield, and growth. As the Indian economy gears up to become the world's third largest, Maruti Suzuki is likely to be the engine driving that journey. Thank you for joining our analysis.